in today's day and age, AI is going to be the center stage of everything that we do, that we talk about. I am going to go behind the numbers a little bit so that it will give you a perspective of where we are. So, do we have, if you can have my presentation on the screen. So, what we're trying to do here is basically looking at some of the numbers, the macroeconomic numbers, where you are, what are the drivers, the structural drivers, if you will, that are driving. So, come what may, this is going to happen. The time frame may be 2 years or it could be 4 years, but because these are structural changes in nature, those are definitely going to happen, and that's where the industry is moving to. Very strong, I would say, London and UK as a market, as you will see, it's a 7.56 trillion pound banking assets market. So clearly one of the largest markets across the globe. You are in, I would say, if you look at the banking assets to GDP ratio, it's at 2.55 times. Clearly, it showcases that London as a global financial hub is here to stay. Combined to that, if you look at the numbers below, the digital banking adoption is at 88%, which is highest among its peer countries, amongst the mature countries, and also obviously among the other Asian countries, African countries. More than 2,500 fintechs. By the way, fun fact, this number was 1,500 last year, which meant that just in the last year it's been 1,000 fintechs that have come up. So you can talk about the vibrant nature of the industry. More than 27 digital only or the neobanks, challenger banks as you used to call them. So clearly a very vibrant digitization that we're seeing, and ably supported by regulations. In here, I'm going to just talk about highlights, given that my time has been crunched. So highlight here is very clearly that the services sector dominates 80%, and we're talking of the financial and the BFSI, the banking and financial institution industry, being a largest value contributor to this 80% services. 7% workforce generates 72 billion in trade surplus. So the banking and the financial services sector is one of the most important sectors in the UK market. Talking about how the banking industry has grown in the past 10 years, a modest growth in terms of assets, a modest growth in terms of deposit, but look at the fourth line item there. The operating expenditure has actually gone down. So banking sector in the UK is growing and growing profitably, well enough profitably. Of course, the geopolitical situations are hindering, which means that the impairment pressure is there on banks in these quarters. But again, structurally, if you relate what I said before, structurally it's a very strong market and it will continue to be so. Digitization, as I said, 1 in every 2 Gen Z now has a digital only bank account. No surprises there. 29% haven't visited a branch in over a year. Of course, we've all seen, experiencing the bank closures, probably more than probably what was needed, and there are other solutions that have come up in the market, which is banking hubs, which goes to ensure that the physical presence is not ruled out completely. But it goes to show that the digitization is strong. Incumbent banks, the share has dropped from 85 to 71% over the last 10 years. You think about it structurally, the trend is so strong that you would have thought that the 85% moving down to 70% is probably never going to happen, but it's happened, and it's happened in the past 5 years. The neobank usage, it has surged from 16% to 50%. We used to call these challenger banks Revolut, Monzo, Starling, and the words, but I don't think that word is true any longer. They're not challenger; they are very much incumbent and really growing strong. So clearly, the digitization is the way to go. Everyone, all the banks, including the traditional banks, are investing heavily in digitization. If you see on the left hand side, we have 1,000 plus FinTech deals. Now, FinTech deals is something that we track at IBS Intelligence, are deals between tech vendors and banks. And you'll see 85% of those are still done by large and medium sized banks, which means the investments for digitization are clearly happening. And that's a good trend in my opinion. All right, tech trends, everything is moving towards AI, right? No surprises. We're talking about digital channels going to AI-led enablement. You're talking of batch payments is probably history. It's all real-time payments. We're talking of manual controls moving to autonomous risk operations. Clearly, there's a trend of real time. Clearly, there's a trend of AI adoption being accepted. I go back to the structural point that I made. The most important point there is 75 customers, they welcome AI agents and banking operations. If you roll back clock and had looked at the same number about maybe 5 years ago, probably that number would have been in single digits. But the acceptance of AI in the general population has grown tremendously. Again, a very structural trend, which means that you need to continue as a banker, need to be aware and continue pushing and accelerating your AI adoption. Tokenized finance, that's the other one that I would like just to point out. Programmable currency, right? That's the most important thing. It's going to have a huge impact in all aspects of banking, right? From fraud management, AML. So it's a very important trend that everybody is going to adopt, especially on the corporate side. It's a trend that we are seeing very clearly in the numbers as well. 87% financial institutions are today exploring tokenization or tokenized deposits. So a very important trend, probably not talked about enough in contrast to AI, but again a very important trend to watch out for. Scaling AI, one of my favorite topics, a slide that I really love. I could, in one of the last summits or gatherings that I presented this slide. I presented this slide for half an hour, so I'm not going to take that much. But again, think about it. There are a few non-negotiables that you need to have in place today if you want to think of having AI tomorrow, right? Data, clean data. We will cover that in one of our later panels. We have experts sitting here who will be able to do more justice. But I think data has been talked about for decades. That has been a problem for decades. Some it's nuanced in terms of, is it a problem? Is it not a problem? Is it a problem going to be larger than what it was previously? The answer is nuanced. It's data. Sometimes people, we've seen, they hide behind data not being good enough to not go and implement AI, right? So that's on one hand. The other hand, of course, data is required to make all the right decisions. Having data which is business owned, it is extremely important, and one of the first pillars in scaling AI. I think the word scaling AI is very important. Talking about modular and decoupled architectures, your architecture cannot, think about it, legacy architectures are a thing of past at a majority of the banks, but they're still not next gen enough in the sense that they're not modular enough, they are not enough driven by APIs. And I think that's going to be something that will hold AI adoption back. So having a modular decoupled architecture will allow you to talk to any system that you want on the fly. Third, process redesign. The interesting concept, I would say, was a relic of past. I know I've done BPR, business process reengineering projects, 20 years ago, right? And I'm still talking about it, right? Why are we still talking about it? Because we now have to completely change the way we think about process reengineering. The processes have to be AI ready, AI friendly, and that's where we are going, right? Explainable AI, as you scale, if you don't build explainability in the AI automation, especially for a bank which is such a heavily regulated entity, is going to be a big problem if you don't have it as a part of your building blocks. Finally, operating model shift, a very important one, in the sense that it no longer is going to be a case that there is an IT department, there is AI center of excellence. A lot of banks have AI centers of excellence, and that seems to be that, okay, I created AI center of excellence, and now all of all the responsibility lies with that team. That's not happening. You need to have an operating model which has AI embedded in each of the teams. The AI expertise has to be in each of the functional teams. 5 building blocks for any of the banks to scale. If you don't have these building blocks, you're going to have a harder challenge as you start scaling. And that challenge will keep going, it's just going to keep becoming multifold in terms of solving it later. So start with these 5 non-negotiables. Finally, what would the future ready bank look like? No surprises. The first one is AI powered intelligence. Customer has to be at the center of everything that you do. The digital first operating model, I just spoke about operating model, how that should change, how the processes need to change. Connected banking, open finance is a very important trend overall, and banks need to be sure that they are on top of the ecosystem. Cybersecurity and control, again, one of the building blocks, if I may. You don't know, so earlier you wouldn't know whether you are talking to a bot or a human, but now the case is there is a system login into your core banking and you don't know whether it's a human or an agent. So the impact that could have is just going to be multifold. Finally, agility and innovation, I think that's given. You just may want to make, you can't any longer have innovation on the side, and only the innovation that is successful you bring it in. That's not going to be the case. It's going to be innovation inside each business function. It's going to be innovation as a part of the bank's DNA, and everyone has to be agile and innovative. Only then you can be customer centric. Only then AI is going to actually help you. So those are my few slides. And we will jump into the panels to explore all of this a lot more. Thank you so much.